a day. And after I'd accumulated making hundreds of pounds, we then went into the crypto industry where I've been able to make tens of thousands of pounds. And it's been very simple. And it is all through the benefits of having such a brilliant mentor. This mentor that I'm going to introduce today, he has shown thousands of people across the world, be in Dubai and Amsterdam, Barcelona, and the list can go on in the countries that he's visited, sharing the information he's going to share with you today. So if I could ask you to bring some energy back into the chat today, and please become aware of the icons at the bottom of the screen, and especially the chat bar, because I'm going to ask you to be putting out some emojis today, some fire signs, some 100s, just to show and share your appreciation today. So without any further delay, Mr. Leo Ski, could you come on the call today, please? Thank you so much, everybody, for tuning in.
All right, good evening, and massive welcome. I appreciate you guys all for tuning in. And, thank you for the kind introduction. For those of you that don't know who I am, my name is Leo Ski. I am 27 years young. And, I've been in this space for the past few years now, but I didn't always start like that. And before I tell you a bit about my background, let me just find out who's online today. And I want to find out where everybody's tuning in from. So if you can please let me know where you're tuning in from, please let me know in the chat box. Your energy is appreciated. I want to know where you're tuning in from, which city, which country, which continent, where are you guys tuning in from today? And again, the person who gives the most energy for today's call is going to be in for a treat, and I'm going to announce it at the end. So we've got people tuning in from Dubai, we've got South Africa, we've got Singapore, wow. We've got Nigeria, England, Trinidad, Jamaica, wow, UK, New Zealand, South Africa, Johannesburg. Wow, we've got a couple South Africans in the building today. Hello, guys, hello. And so, yeah, just to give you a bit of background about me, I'm reigning in from the UK. We've got Uganda on the call as well. Amazing. So I'm reigning in from the UK. And, the past few years, I've been in the Forex space. I've been learning how to trade. I've been, not only learning how to trade myself, but also teaching people how to trade. It didn't always start like that. I first had to learn as well. And the reason what motivated me to get into trading was because at the time, when I first started learning, I was an Uber Eats driver. I was actually dropping off people's McDonald's, knocking on people's doors, delivering their McDonald's. And I was making about £40 per day. Now, for some of you that are in different countries, you have to understand the average income for most people in the UK is around £80 to £100 per day. But I was full-time Uber Eats driver making about £40 per day. And with that, I was barely being able to survive. And so I don't know if there's anyone like me, but I was looking at different other ways of making an income outside of my 9 to 5. If you're anything like me, drop some 111s in the chat box if you was looking for a way to make money outside of the traditional 9 to 5. And so, I came across the industry of Forex, and, one thing which was relevant to me, which I started to understand, was that I can now have my money make me more money instead of me work harder to try and make me some more money. And, I started to dive into the space. I've blown multiple Forex trading accounts. So I'm just like you. I've failed prop firm challenges. I have done all of the things that you're probably going through today. I've done. And Forex in the beginning, it didn't make sense to me. In fact, I was very, very scared at the beginning because I was afraid of losing all of my money that I had in my trading account, until I started to educate on what a stop loss is and so on and so forth. And I started to engross myself in trading so that I can now become profitable. My light bulb moment happened after 3 years. And although I've now been trading, I guess, for the past 3.5 years, my job today is to make you believe that you can trade Forex. And I just want to get and gauge as to where you are in your trading journey at the moment. Okay, on a scale of 1 to 10, with 10 being you're an expert in trading, where would you say that you are on a scale of 1 to 10? 1 being you know nothing, 10 being you're an expert. Let me know in the chat box so I know who exactly I'm speaking with today. Okay, we've got some 5s, we've got some 6s, we've got some 1s. No problems. We've got some 2s, we've got some 4s, we've got an 8. Amazing, amazing, amazing. And so I'm going to be addressing all of you guys today. Now, some of you was on actually the last week's session. This is going to be an exact same repeat. So if you were, well, you should already know that. But if you're on for the second time, then hats off to you, because I know that you're someone who's really serious about trading. So Forex Mastery, let's get into things. So I'm going to be going over the 6 things that you need in order to make money with trading. Okay, there's only 6 things that you need. And I say this, these are literally the 6 things that you need to start making money. Okay, the first thing that you need to start making money with trading is a smartphone. Now, it doesn't necessarily matter which smartphone you have, as long as you have a smartphone. They say if you're not making money from your smartphone, it's not a smartphone, it's a dumb phone, right? And so it doesn't matter if you have an Apple, iPhone, or an Android or a Samsung, you can still make money from trading. So just to kind of gauge where you guys are do you have a smartphone? Have you got an Android, or have you got an Apple? Which one do you have? Let me know in the chat box. Have you got an Android or an Apple? Okay, you've got an actual Apple. You can't trade from an actual Apple, guys. It needs to be an iPhone if you didn't know. Okay, so just a heads up. All right, Android, someone's got both. Amazing. So personally, I've got an iPhone. I've actually got 2 iPhones if one wasn't good enough. Okay, amazing. And as mentioned before, for those of you that give the best energy today, I'm going to be giving you a treat at the end of the call. I'm going to be selecting one winner to actually be in with a chance of getting a one-on-one private mentorship call with me. Okay, so Apple and Android users, let's get into things. So that's the first thing that you need. The second thing that you need is MetaTrader 4. Now, MetaTrader 4 essentially is your trading platform. This is where you place trades on. It's an application on your phone. You can also use MetaTrader 5, and or you could trade from your broker, but MetaTrader 4 is probably the one that most people are familiar with. Okay, and so if you already have MetaTrader 4, drop some 444s in the chat box. If you don't have a trading app yet, then you're a 1 out of 10 in terms of your knowledge of Forex, please download MetaTrader 4 from your app store. And once you've downloaded it, drop a 444 in the chat box. Okay, or some people have MetaTrader 5. If you've got MetaTrader 5, and you can drop some 555s, no problem at all. I just want to see what you're trading with and if you have the right tools. Okay, we've got a few MetaTrader 5s, MetaTrader 4s, perfect. Personally, myself, I trade from MetaTrader 4, but that's just me. I find it to be a lot more simple. But again, some of you might prefer MetaTrader 5. And again, I'm going to be addressing everybody. So if you're 1 and you know nothing about trading, then these are the steps. These first few steps are more so designed for you. If you're somebody that's a 5 and above in terms of your level of knowledge when it comes to trading, then the end of the call is going to be more so specific for you. All right. So they're the first 2 things you need. Number 1, a smartphone. Number 2 is MetaTrader 4. The third thing that you need is a broker/demo account. Now, if you're brand new to Forex, then my advice is that you open a demo account. Now, typically, when you download your MetaTrader app or your trading app, then you can open MetaTrader and it will automatically open up a demo account for you. A demo account means you're trading with fake money. Okay, so like fake money that you can use to test your strategy with. And if you already are in the Forex space, then you probably have a broker. And the broker is designed for you. It's basically like your bank account within the Forex market. So let's just say right now, if you wanted to trade Forex and you don't have any Forex apps or broker or your demo account, then how else is your money going to go up and down that's in your bank account? It can't. So you need to put it from your bank account into your broker account. And once it's in your broker account, then you're able to trade that capital so you can hopefully grow it. So that's what a broker is, and that's what a demo account is. I hope you understand the difference between the two. Now, please let me know in the chat box if you have a broker or are you on a demo account. Okay, if you've just downloaded MetaTrader 4, then I recommend that you, open the app so that you can see your demo account. And it should probably start off with 100K. Some people have both. Amazing. Broker, both, broker. Okay, perfect. Amazing. Again, this is just what links your capital to the market. Once you've got your broker and your demo account, you input the details, the login details onto your MetaTrader 4, and now you're able to access the market and trade price movement. Now, so we've got a smartphone. That's the first thing you need. Okay, we've got a broker, a demo account. Okay, I'm gonna forget these, but I'll remind myself after. We've got a smartphone. That's the first thing you need. Second thing you need to trade Forex is MetaTrader 4, which is your trading terminal or your trading app. The third thing you need is your broker account or your demo account, which links up your money to the market. And again, I would suggest and I recommend taking notes on this call. Okay, please take notes and have a notepad and pen handy. The fourth thing you need is TradingView. Now, what does TradingView do? TradingView allows you to view the markets. It allows you to view price movement. It allows you to see those funny charts with the lines that go up and down. This is what TradingView does. If you have a smartphone or a tablet, then you can download the TradingView app. If you're new to trading and you're on this call for the first time, then please download the TradingView app. Or if you have a laptop, which is the best thing to do, you want to type in TradingView and they have it on the website. Personally, I use TradingView on the laptop. It's better for you to be able to see the whole of the charts. Okay. So once you've got TradingView, please let me know by dropping a number 2 in the chat box, guys. Amazing. Amazing, amazing, amazing. Great energy today, guys. All right, cool. So you got your TradingView. Okay, so that's the 4 things that you need. Okay. The 5th thing that you need is your strategy or your knowledge. Okay. So you've got your smartphone. You've got MetaTrader 4, your trading terminal, your trading app. The 3rd thing is you need your broker account. The 4th thing, you need to be able to see the charts, so TradingView. And the 5th thing you need is knowledge. Now, if you actually look, oh, and by the way, guys, can you please come on camera if you're able to come on camera? I want to see and feel your energy as well, because your energy allows to feed me. Otherwise, I'm just in a blank room looking at nobody, right? So if you guys can come on camera, it'd be good. That way I can gauge your energy as well, okay?
Let's fucking go.
Let's go, let's go. Amazing, amazing. Good stuff. So the 5th thing that you guys need is knowledge. Now you're probably thinking, that's everything that you need, okay? You've got TradingView, you've got, I'm going to do this in the wrong order now, but you've got your smartphone, you've got TradingView, you've got MetaTrader 4, you've got your broker account, and you've got your knowledge. What more do you need to be able to trade in Forex? Well, knowledge, the reason why I want to highlight knowledge is because there's 2 types of knowledge in trading. The first type of knowledge is strategy or technical knowledge, okay? This allows you to be able to know what to do in trading. It allows you to know when to enter the market, when to exit the market, and place your trades. But the second part of your knowledge that you need, because it's broken down into 2 areas, is psychology or your psychological knowledge. Now, your psychology is probably, in fact, I'm going to ask you a question, right? So your strategy, you need to place your trades. Your psychology is what you need to trade effectively long term. Now, out of these 2, what do you think is most important? Your psychological knowledge or your strategy knowledge? Someone said psychological with laughing faces. I don't know what's funny.
Logical and strategy.
So we've got psychological, psychology. Someone said both. Okay. Both. I like it. I like it. I like it. Now, this is the way that I put it, and write this down, please, guys. Your strategy is what makes you money. Your psychology is what keeps your money. Write that down. Okay, your strategy is what makes you money, and your psychology is what keeps your money. So with that being said, can we agree you're probably gonna have to have your psychology? And the thing which most beginners, the mistake which most beginners make in trading in the beginning is that they only focus on strategy. I promise you, I only started to learn psychology probably after like 2 years, 2.5 years maybe. So all this time, the first 2.5 years in trading for me, I've been focusing on strategy. How can I enter the trade? How can I enter the trade? Well, guess what? You can make money with just knowing strategy, but you're not going to be able to keep it. Because the same thing that made you money will be the same thing that loses you money, unless you have your psychology. Okay. So apologies. I know, we've got people tuning in from different countries, and this might now be translated in Dutch. So I'm going to try and speak as slow or as possible if I can. So they're the two sides of things. Now, strategy, I would say, makes up about 20% of you as a trader. 80% of this game is psychology. Now, some of you are thinking, wow, how's that possible? All I know is learning strategy, learning support and resistance, learning trend lines, learning supply and demand. You're thinking, wow. But 80% of this, I promise you, is psychology. You can have the best strategy in the world. If you have no psychology, you're not going to make any money. In fact, you'll lose money. Right? And so today, I'm going to teach you a little bit about strategy. But for those of you that are brand new, I want to show you how you actually place a trade. Now, I use an iPhone, so it's very easy for me to be able to show you how to place a trade with an iPhone. But this video is for you guys that are Android users. Okay? And so I'm going to show you how to place a trade before I show you a bit about strategy. Okay? So let's get into things. This is how to put in a trade in MetaTrader on your Android. So on the first screen that you see, this is called your quotes page. And your quotes page, it shows you the different currencies. Okay? And when trading Forex, you're trading one currency against another currency. As an example, you see the currency pair at the top. It's called EUR USD. Now, does anybody know what that stands for? EUR USD. Or what two currency pairs are being traded?
Can I speak?
Yeah, go for it, Randall.
Euro and US dollars.
Euro against the US dollar. Perfect. Now, again, you've got the other currency pairs listed below. So this is your quotes page, and the numbers at the side is the price of the currency relative to another. Okay, so let's go forward. Next thing that you want to do when placing a trade is you want to click on the currency. Okay, as you can see, this person's clicked on Euro USD. And the next thing you do is press new order. Now, once you press new order, I think on iPhone it says place trade. Okay, it will bring you to this page. Now, at the top, it says instant execution. This means that when you press sell or buy, the trade will execute straight away. You're going to be in the market straight away. I remember the first time that I placed the trade. Instant execution. It was the scariest thing ever. And the reason why I said that is because now I could see my account balance was moving as the price of the market was moving. So when you do instant execution, you're in the trade straight away. Now, underneath where it says instant execution, it says 0.05. This is your lot size. And the bigger the amount of lots, the more you're going to be risking per movement. As an example, 0.05 means that every time the price of the currency moves by 1 pip or 1 movement, it's going to be a 50-cent movement. So if it goes up by 2 pips, that's $1 is moved by. If it goes up by 10 pips, that's $5 is moved by. If it goes in the wrong direction, then it's $5 that you're down by. Hope this is making sense. So as a beginner, you want to learn what the lot sizes are. 0.01 is 10 cents. Okay, so a question for you guys. If I go to 0.7 lot size, how much is it per movement? If 0.01 means 10 cents, what does 0.07 mean?
70 cents.
70 cents. Great work, guys. Great work, great work. 70 cents, yeah. Now imagine this. Imagine if you do 1.0, that's $10 per movement, which is 1 standard lot. Now imagine if you have $100 in your account and price moves just by 10 pips or 10 movements. You've now just lost your whole account. Okay, because $10 per pip and it moves 10 pips, that's $100 is just moved. So if you've only got $100 in your account, you've just now lost the whole account. This is why it's crucial to understand lot sizes. Now, underneath that, it says SL and it says TP. This stands for stop loss and it stands for take profit. Now, the difference between the two, your stop loss is what stops you from losing all of your money in your account. Okay. Now, the great thing about your stop loss is that you can set it to be whatever you want it to be. If you only have, let's just say $100 in your account, then you can set your stop loss to be a $10 stop loss or a $5 stop loss. And so it's important that you understand how to work out your stop loss. Now, what happens is when price goes in the wrong direction, if it goes too far, you can set your stop loss at a certain price so that the trade automatically closes to prevent you from losing your whole account. Okay. Your take profit is the opposite way around. Is when you're in a certain amount of profit, the trade will automatically close to allow you to secure the bag. Okay, I hope that's making sense. Now, that is what stop loss and take profit is. Now, let's move on. You can change your type of trade from instant execution to buy limit or buy stop, sell limit, sell stop. This means deviation is only relevant for demo accounts. Okay, it pretty much means if the demo account price is different to the live price, you can set the deviation. But you can now change your type of trade that you're placing to a limit order or a stop order. This means that the trade will only execute when the price of the market goes to a certain price. Let's use an example. If you trade or want to invest, let's just say in cryptocurrency like Bitcoin. At the moment, Bitcoin is at $70,000 per coin. You can set a limit order for $20,000 per coin, which means that the trade will not open. You will not buy Bitcoin until the price comes back down to 20,000. I hope that makes sense. And let's just say, and that's basically what a limit order is. So without confusing you, you can select what type of trade you want to place. Okay, and you can put in your stop loss, take profit, and place trade. And that is your trade executed. So I hope that's making sense. Is everyone with me? Drop some free threes if you're with me. All right, with 30 minutes in so far, guys, this is going to be an extensive call for you that's a beginner. Amazing, amazing, amazing. Good stuff. So that's how you execute a trade. Thank you very much. Right. So next step. Let's talk strategy. In fact, I want to know why you're on this call today, because some people you already know how to trade. If you're a 5 and over, you already know how to trade. So if you know how to trade already and you want to dust up on your skills, what are you on this call for? Are you on this call because you want to learn a better strategy, or are you on this call because you need to get better at some aspect of your psychology? I want to find out. Just because I want to get into more depth if there's more people that require more from one area. You guys, you're not helping. You say both, right? Okay, cool. To learn strategy, amazing. Okay, cool. Psychology. No, I don't still trade in bots, unfortunately, guys. To learn strategy. Amos, you got a question? Are you good? Okay,
Yeah,
cool.
because you mentioned what do we want to actually specifically learn from this course, and so the reason why I'm here is because I realized that I have issue with my risk to reward ratio. I have been winning quite in terms of quantity, in terms of quality is not there. So maybe for every 10 trades that I win, I can win 8, 9, but one trade will wipe out all my profits for the week, for example.
Okay, cool. So would you say it's more of a psychology aspect than for you?
Yeah.
Yeah. Okay, cool. Perfect. And again, thank you for your input. I appreciate it. All right, cool. So I'm going to be getting into some strategy, right? And let me share some technical analysis with you guys. Technical analysis is essentially the aspect of watching the charts to place your trades. Okay, so I'm going to load up my trading view so that I can show you what to do. Okay. Perfect. Oh, I might need to press resume. All right, cool. So you should be able to see my screen. Okay, you should be able to see my trading view charts. Now, with trading view, if you're new to Forex, this is probably looking crazy to you. This is like looking like all of these squiggly lines, looking like a lightning bolt that's red and green. It's not a lightning bolt, that's red and green. What this simply means is this is called a Japanese candlestick chart. And the Japanese candlestick chart, or these lines, each line is called a Japanese candlestick. Okay. The green part or the red part is called the body of the candle. And the lines at the top and the bottom of them are called the wicks. So if you don't know what that means, please write that down. The green and the red part is called the body, and the lines at the end of the candles are called the wicks. Some people call them shadows. I call them wicks. Okay. Now, what does this do? This shows you the movement of price over a certain period of time. Okay. Now, this is the 1 minute time frame. As you can see in the top left corner, it says 1 minute, which means that this candle was represented price movement over the space of 1 minute. If I go to the right side of my screen, this is the price of the currency. you can see is 1.35727. Or let's just start from here, 1.35746. That's what this candle started at. And it ended at 1.35792. So within that space of that 1 minute, price opened here and it closed at the top. And that's what made it green. You see, what makes a candle red is when price opens at the top and it closes at the end of that 1 minute or the end of that period of time lower than what it opened at. Now, what does a wick mean? The wick means, let's just say this is a red candlestick. It means that what happened here? It means that price opened here at this price. It went up, turned green, but at the end of that 1 minute, it closed here. It closed lower than the open price. That's what made it red, or that's what gave it a red body. Okay, so hope that makes sense. So yes, technical analysis applies to every market, even gold. Okay, gold is a commodity. I also trade gold. Okay, I love gold. In fact, I love trading gold. I am currently not trading gold at the moment because it's in territory which nobody knows about. Okay, but this is really what a candlestick means. Now, there's two different types of trades that you can place. Okay, and again, I'm sorry guys if you're already a 5 and above, but this is for the beginners, this specific section. So just bear with me a second and I'm going to help you guys in a sec, right? So for those of you that are new, there's two different types of trades that you can place. Okay, I want you to write this down. The first type of trade is called a buy or a long position, which means you make money when price goes up. Now, it's just like investing. You invest in something because you want the price of it to go up. So when the price of something appreciates, you're going to make money because you bought it when it was cheaper, when it was low. But investing and trading is different. And the key difference between investing and trading is that with trading, you get a different type of trade that you can place, which is called a sell or a short position. This means you make money when price goes down. Okay. But these are two types of trades. Now, when you know that there's two different types of trades, you want to be able to make money when price moves both directions. And how do you do that? You need to think of your strategy. Okay, now what your strategy does, it allows you to predict where price is going to go next so that you can get in the market before price moves that way. As an example, if price is low at the moment and I think it's going to go up, what type of trade do you think that I should place? If I think that the price is going to go up, do you think I should place a buy or do you think I should place a sell? Let me know in the chat box. Amazing, 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 amazing. And so if I think price is going to start going down, I want to do the opposite and I want to take a short position, which is a sell, because I make money when price goes down. Now, how do you know when price is going to go up or when price is going to go down? It's based off of your strategy. Now, there are various different types of strategies that you can use, and there's no wrong or right one. There's only ones that make money. And this is something for you as well to understand. There is no strategy that is 100% profitable that will allow you to win 10 out of 10 trades. If you have an 8 out of 10 trades that you win for your strategy, for your win-to-win ratio, then that is a very good strategy that will make you money. Okay, if your strategy is you know, 8 out of 10, wins 8 out of 10 trades. Okay. So someone asked the question, how does a sell work if price goes down? I mean, like, how do you make money when you step in a sell? Now, the concept itself is pretty complicated. I don't want to over confuse you, but it's essentially like you're borrowing money or you're promising to give someone something when the price is lower. So you're putting in your contract at a high price and you give them your money and you'll buy it back from them when price has gone lower. Okay. Or let's just say they're promising to give you a certain amount of that currency or commodity when price is going to go lower, because you know that price is here. Okay, but because you put your contract in here and price goes up, you're going to be losing money until price comes back down and you can buy it back off of them lower. Again, it's complicated to understand, but the basic thing that you need to understand as a beginner is when you place a sell, you just make money when it goes down. Okay. So how to identify where to buy and where to sell from. Okay, there's an example or a strategy that you can use, which is called support and resistance. I do not trade this strategy. Okay, so I just want you to understand this. But this is something that you should gauge, which can be very simple to understand as a beginner. Okay, and there's a strategy called support and resistance. It acts like a floor and a ceiling. I can teach it to you in the space of 3 minutes, right? So let's just say as an example, I have a basketball. Okay, yeah, for sure. Karen, it is a bit complicated, but like I said, if you just place a sell, just know when price goes down, you make money. Okay. Now, this is a question for you guys. If I have a basketball and I bounce the basketball on the floor, what direction should it go in after it hits the floor? Up.
Upwards.
Exactly. Amazing. Amazing. And let's just say if I bounce a basketball at the ceiling, what direction should it go in after it hits the ceiling?
Down.
Down. Exactly. Perfect. And so the thing to understand here is that we use the floor as a support and the ceiling as a resistance, because it resists price from going any higher, and the ceiling, it supports price from going any lower. This is a visual demonstration as to what support and resistance looks like. You can only confirm that something is a support or a resistance if it touches that area twice and bounces back off. Let me give you an example. This is one touch and price went back up, as you can see. This could be the second touch. Price went back up. Okay, so that's now 2 times that price has come down and bounced off. Come down and bounced off. So what do we think is going to happen the third time price comes down to this area? That's a question for you guys.
Going back up.
It's gonna bounce up again.
Exactly. Thank you, guys. Appreciate it. Going to bounce back up. And as you can see, it hit the support and it bounced back up. So you would have made money when price went all the way back up. If you had placed what type of trade, a buy or a sell?
Buy.
Buy, exactly. Okay, great stuff. I'm going to keep you guys on the ball today. And you're doing great so far. So you would have placed a buy here. You would have put your stop loss for just underneath. Okay, and maybe you would have put your take profit 1 to 1. Maybe you would have put your take profit 1 to 2. And you would have made money. Okay, but anyways, this is just explaining the concept of support and resistance and how to anticipate when price is going to move in what direction. Now, resistance or the ceiling is the opposite way around. If price hits this area twice and bounces off, you've now got a resistance. So I'm going to count this as 1. Okay, hit there, bounce down, hit there, bounce down. So it's going to come up and hit here. What type of trade will we be going in for? A buy or a sell when it comes up to hit here?
A sell.
Sell. Amazing. Okay, because we think price is going to go down next. And that's exactly what we would do. Okay, on the third touch, we would place the sell, put our stop loss just above, take profit. It could be 1 to 1, it could be 1 to 2. Okay. But you would have made money when price goes down. Okay, imagine if you left it all the way down. Look at all of that money that you would have made. From here all the way down here, if you had placed a sell. Okay, that is simply how trading works. Okay. Now, support and resistance is a beginner's basic strategy. I don't want you to get caught up with it because some people like it, some people don't. Personally, I don't trade it. And I'm here to teach you what I have done so that you can learn faster than me. All right. So I'm going to show you now the strategy which I use. Okay. Now, the strategy that I use is kind of contradictory. Okay, now the way that it works is this. I go into my charts and I need to plot out the high and the low area of between 2 o'clock and 5 o'clock. Okay, so this is 2 o'clock here in the morning and 5 o'clock in the morning is here. So I need to find the high point and the low point between these two areas. So this is the low point. Okay, because between 2 o'clock and 5 o'clock, that's the lowest point it was at. And the high point was up here. Okay, now, how do we know what type of trade to place? Very simple for my strategy. Okay, is when price goes down and breaks the bottom, we will take a trade to aim for the top. Okay, so price breaks the bottom, we aim for a trade at the top. If it does the opposite thing and it breaks the top first, then we're going to aim for a trade to go down to the bottom. Okay, so as an example, this could have been a trade. Okay, that would have been a 1 to 3 risk to reward ratio. Now, me personally, would I have taken this trade? Yep, I would have actually won this trade at a 1 to 3. Okay, now, so if it breaks the bottom, we aim for the top with a buy. If it breaks the top first, we aim for the bottom with a sell. That is my strategy. That is how I make money. Okay. Does this make sense to you guys? Is it simple to understand? What do you guys think? This is my trading strategy. This is, what time frame do you recommend? I personally trade off of the 1 minute time frame, but I do top-down analysis. And top-down analysis means that you go through, you start on the daily, and you trade downwards. Okay. Make sense? Make sense? Make sense? Perfect.
Yeah.
Cool. Now, again, if I'm placing a sell, it's because price broke the top first, and then we're going to look for a trade towards the downside. So that's how my strategy works. Now, you're probably thinking, wow, this strategy is so easy. Yes, it's easy. Now, if you want to really learn the strategy, what you're going to need to know is when to enter the trade, because you can't just take the trade because the trade broke the bottom, because price could just keep going. And if you're in on a buy, you're going to hit your stop loss. Okay, because some people could be like, oh, okay, cool. Price has just broke the downside. Let me place a buy. You can't do that, right? You need to know when and where to enter the trade. Now, if you're trading with me, you're trading with our private community, I'm going to show you exactly what to do on how to place your entry, on how to spot where to enter the market from after it's broke the top or the bottom, so that you can make a nice bit of profit with our strategy. Okay? So that is that. Now, the second thing that I want to touch on with strategy is called risk to reward ratio. Okay. Someone asked a question. Why do you trade 1 minute? The reason why I trade the 1 minute time frame is because it suits my personality type. Okay, and I'll speak more about that shortly. Okay, this sounds easy, but when in real time it becomes hard. Not if you know what you're looking for. Okay, of course, if you're good at managing your psychology and stuff like that, then it's very easy. If you know what you're looking for. If you're not good with your psychology, then of course it's hard, even if you know what you're looking for, because things come into play like fear and greed and so on and so forth. But I'm going to speak about that in a second. Okay. Now, what I'm going to speak about now in terms of strategy, this is the last thing to touch on in terms of strategy, is called risk to reward ratio, which is also indicated by RR. Okay, which means risk to reward. Okay, or it's called an R. Either way, I call it risk to reward. Now, what a risk to reward means is how much are you risking in order to make a certain amount of reward from each one of your trades. I'm going to show you what it looks like visually. This is an example of a risk to reward of 1. You can see in the middle, risk reward ratio 1, which means 1 to 1. You're risking $1 to make $10. You're making $1 to make $1 back. Or you're risking $10 to make $10 back, or $20 to make $20 back, or $100 to make $100 back. That's what risk to reward means. Okay. Now, if you have a 1-to-1 risk to reward ratio, you need to have a win rate. Okay, win rate means how many trades out of 10 win. Okay. So you need to have a win rate of 6 out of 10 trades if your risk to reward is 1-to-1. Let me show you what I mean. Let's pretend I'm making $1 or losing $1 to make $1. And I win 6 trades. 6 trades, and I win $1 each equals $6. Now, let's just say the 4 trades, remember 4 out of the 10 would lose. Okay, this means 4 trades lost equals $4 lost. So this is a question for you guys. If I have won 6 trades and lost 4 trades, am I in profit or am I in a loss?
Profit.
Profit, perfect. And why do you say profit? How much profit would I be in?
$2.
$2, amazing. Now, the reason why is because I've won 6 trades, or I won $6 and I've lost $4. So 6 minus 4 is $2 profit. Okay, because my win rate is more than my lose rate. Okay, we don't call lose rate, we just call it a win rate, by the way. Okay, now, if I win 5 and lose 5, am I in profit or am I in a loss?
Balanced.
We're balanced, right? Amazing. Great work, Randall, because that was actually a trick question. Okay, we're at break even. Okay, we're at break even. We're on 0. We haven't made any money. We haven't lost any money. Why? Because we've won $5, but then we lost $5. So we gave it all back, which means we're at 0. Okay, now, that means you need to have a win ratio or a win ratio of 6 out of 10 for you to be profitable with a risk to reward of 1-to-1. But watch this. If I have a win rate of 1-to-2, which means I risk $1 to make $2. I'm going to show you the difference because this is why risk to reward ratio is key. If I win 6 trades, bearing in mind, for each trade that I win $2 now instead of 1. If I win 6 trades, how much money have I made?
$12.
Amazing, $12. If I lose 4 trades, how much money have I lost?
$8.
No.
Yes.
$4, right? See, this is the beauty because I'm still risking $1. But the good thing is I'm risking $1 to make $2. All right. Now, this means that I've made $12 and I've only lost $4, which means at the end of it, I'm up by $8. Whereas before, if I had a 1-to-1 risk to reward, I would have only been in profit by $2. But now I'm in profit by $8 just because my win rate, my risk to reward is better. So let me give you an example again. If I win 4 trades, okay, how much money do I make? If my risk to reward is 1 to 2. Good evening, John. Good to have you with us. If I win 4 trades and each one of my winners gives me $2, how much money do I make?
$8.
$8. Good stuff. Thank you, guys. Remember the energy. That's what I'm looking for. The person with the best energy, they win a 1-to-1 session with me. Okay. Hope you guys understand. So I win $8. Now let's just say if I lose the next 6 trades, how much do I lose?
$6.
$6.
Amazing. Thank you, guys. Perfect. So am I in profit or am I in a loss?
You're in profit of 2, yeah?
Exactly. Okay. Plus $2. But think about it like this. If I had a win rate of 1-to-1, I would have made $1, $2, $3, $4, and I would have lost $6, which means I would have been minus $2. But because my winners was giving me $2 each, I've lost 6 trades, which is more than the ones that I've won. But because the ones that I did win have made me more profit, I have still ended up in more profit. I hope this is making sense to you guys. So risk to reward ratio is major key. And the reason why I really wanted to emphasize on this to help you understand is so that you can really comprehend that as a beginner, the reason why most people lose money, 90% of people lose money in trading. And the reason why is because the ones that they lose a lot. They lose substantially more than what they make. Because their psychology gets into play and they let their trade run longer into a loss. They take off their stop loss and the trade keeps going the wrong way. And they now take a big loss. But their profits, they're just making little profits. So all it takes is 1 or 2 big losses and you're done. You're finished. But guess what? If you have 1, 2, 3, or 4 big wins and the rest are just small losses, you're going to end up in profit overall. Okay? So this is what the power of risk to reward ratio does. Now, I've explained to you using 1 to 2. A 1 to 2 risk to reward ratio allows you to lose 6 trades and still end up in profit out of 10 trades. Now, you see with the strategy that we use, it's not rare to see a risk to reward of 1 to 4, which is double this. Okay, so imagine with a 1 to 4, you can lose 8 trades. If you just win 2, you're still at break even. You haven't lost no money. Even if you win, if you lose 8 trades in a row, if you just win those 2, you're good, right? You're good. So that's that. I hope you guys are understanding. I hope you guys are with me. If you guys, in fact, where is everyone? I can't see anybody's beautiful faces. Okay, remember, I'm trying to see some faces on here. People are going missing. Don't know if they're getting lost, or maybe they're just scared of me. I'm not gonna pick on you guys, by the way. I just want to see your faces so that I can feel your energy. Right? So let's move. Now, yes, I'm talking yes, I'm talking about you, Nana. I'm talking about all of you. Right? So this is strategy. This is what I'm going to be talking about in terms of strategy. I've shown you how my strategy works. I've shown you risk to reward. I've shown you your win rate, what it needs to be for you to be profitable. This is strategy. If everything's making sense so far, drop a 111, or if you've got a question, then let me know what your question is. And you ask how to understand the news. Yeah, for sure. So when trading the news, the way that it works is the result of the news will either be good or bad for the currency. So let's say, as an example, you're trading gold. Okay, so I'm going to go into a gold chart. And usually for gold, there is news at 1:30 p.m. when it does happen, okay, which is 8:30 p.m. on New York time. Okay, I don't know if there's any news today. I don't think there was. So let's just say 8:30 is around here. Now, usually, if there is news which is good for the United States dollar, it means that gold will get weaker. Why? Because the dollar's got stronger. So I want you to pretend that, imagine if you was having you know, I don't know if you guys are familiar with like an arm wrestle, and this person's gold, this person is the United States dollar. Now let's pretend if the United States dollar gets stronger, what's going to happen to gold in an arm wrestle? United States dollar gets stronger, what's going to happen to gold? Okay, it will go down, right? No one's saying it, but it will go down because the United States dollar is going stronger. When the United States dollar gets weaker because of the news, gold gets stronger, which means that gold will go up. Okay, that's the effect of the news. As an example, if interest rates are at an all-time low, and that's announced in the news, it means that the United States dollar will get weaker and gold will go up. The reason why is because when interest rates are low, investors don't want to keep their money in dollars because they're not making much money back from it in terms of interest. So they'll take their money out of the United States dollar and they'll probably put it into gold. That causes the price to go up. Okay, I hope that I hope that makes sense. How news works. Okay. How can I perfect the strategy? To perfect the strategy, you do something called back testing, which means that you find your strategy that works and you go back in time and you see 100 different trades that you would have taken if the price was live. And you journal it, you mark it down, you find out what was the result of that trade. Would it have hit take profit or would it have hit stop loss? So you back test, and that's how you perfect your strategy. In terms of really perfecting and really mastering it, I would say that you would have to forward test as well, which is see how the price plays out in a live market as well. Okay, perfect. So if you're ready to hear some, new information on not knowledge, but if you want to talk about psychology, let me know by dropping some PPPs in the chat box. Don't know if you guys are ready for some psychology. All right, so this is pretty much the second segment. So what I want you guys to do, for those of you that's on camera, I need you to stand up and we're going to do some stretching because it's been a bit of information and I want you guys to really digest and understand this next part of the section because psychology is more important than strategy. Okay, so I want you to stand up and we're going to do a quick stretch, okay? Or if you can, do some press-ups. Okay, I haven't been to the gym today, so I'm going to do some press-ups, 20 press-ups, get the blood flowing because it helps you to retain information a lot better and it refreshes you, okay? So 20 press-ups, 20 squats, awesome stretches. Let's go. Once we're done, we're going to get back into some psychology. All right, let's go. All right, you ready? Let me know. All right, who thinks that I've got bigger muscles now that I've done a few press-ups? All right. Cool. Amazing. So let's talk psychology. Okay, everyone's off camera. I don't know why everyone's getting shy for. I was trying to see your press-ups. Okay, cool. So let's talk psychology. So these are the typical psychological struggles of a new trader. Okay. And most of them, they boil down to fear and greed. Okay. So I'm going to explain what each one of these means. And I'm going to ask you if you think it's fear or if you think it's greed. Okay. And this is for you guys on TikTok as well. Okay. So revenge trading is essentially what happens when somebody takes a loss on a trade and they decide to go back into the market again to try and recoup the loss that they have just made. Is revenge trading motivated by fear or is it motivated by greed? Let me know in the chat box.
Greed.
Some people say fear, some people say greed.
I think it's both.
Okay. Good answer. Why do you think it's both, Randall?
Why I say it's both is because they just lost and don't want to say lose a trade. They want to say win a trade to somebody else.
For sure. So for those of you that said both, well done. Honestly, well done. Okay. And I want you to write these things down as well, because it helps you to see when you're trading out of fear and greed. Revenge trading can be considered both fear and greed. The reason why is because when revenge trading, oh, 1 second. When revenge trading, you are essentially being greedy because you're trying to make your money back, but you're also being fearful because you don't want to seem like you're a loser. Okay, or you're scared that, you know, of your results. You're scared of what other people might think. That's fear. Greed is wanting to make as much money as possible. Okay, so maybe if you lost that trade and you've gone in for a second trade, you're being greedy because you want to make that money back and even more. But it's also considered being fearful because you don't want to feel as if you're a loser or you're a letdown. Okay. Now, overtrading. What is overtrading? In fact, let's talk some more about it. Okay, I'm going to give you a solution for each one of these problems. Okay. In fact, let me ask you guys in the chat box, out of all of these, what one do you suffer from the most? You can just let me know the number, which is your biggest problem in trading. Let me know. Which one do you struggle with the most? 3, 1, 2. 2, overtrading. 3, impatience. Okay, cool. Someone's never took a trade before, and that's completely fine. Okay, but I need you to understand what each one of these things are. Okay, so for revenge trading, this is the solution for revenge trading. The solution is, and you can see it's got dark outside. Let me just edit my camera. The solution for revenge trading is, number one, is to open up a secondary account. Okay, now what I mean by that is that, let's just say, for example, if you've lost a trade on, on your main account, you want to open up a secondary account, which is your risk account, because you now are giving yourself permission to take your revenge trade to satisfy this emotional imbalance in your brain. Okay, that's one solution that I can suggest. The second solution is, for the second trade that you're going in on, okay, the actual revenge trade, risk less. Make a promise to yourself that if you're going to revenge trade, risk less. Use a smaller lot size. Okay, that's the second solution. The third solution is, do something that requires you to pause between your trades. So let's just say if you've taken a loss, you're feeling angry, you're feeling frustrated, you're in a bad mental state, you need to pause. You need to pause and do a different activity. I would recommend journal your trade. The reason why journaling my trades made a huge difference for me is because it allowed me to get out of that mental frame of mind that I was in, of feeling like a loser after losing a trade, because of the fact that it allowed me to pause. That pause will be everything. So the same way how I told you guys just to do some press ups just then, if you're in a moment where you're feeling like you're going to revenge trade, or you've just taken a loss on a trade, make sure you do 20 press ups, or make it 50 if you can do 50, or do some squats, go for a walk, do some exercise. These are things that will also release endorphins, which will make you feel less stressed. And the fourth solution I recommend is temporarily delete MetaTrader 4 from your phone. Okay, so these are some solutions for revenge trading. Second solution is overtrading. Okay, I know some of you said that you struggle with overtrading. Here's some solutions. Overtrading, by the way, guys, it means when you place a trade, it wins maybe, and you place another trade. It wins, maybe you place another trade. It wins, maybe you place another trade, and you place another, and another, and another, and you're feeling like the top dog. You're feeling like the boss because you've placed all of these trades and now you're winning. But there's one problem. When you're feeling on top of the world, you're operating with emotion. As an expert trader, you do not want to be feeling like the top dog. Even if you won 5 trades, 10 trades. Why do you think I say that? Okay, this might be a question you don't. Randall, did you want to say something?
Yeah. Yes, they're going to enter too much trade, and when it starts to lose, they go start you demotivated and let down.
Mm-hmm. Yeah, for sure, for sure. But the main thing that I'm getting at, okay, you're 100% right. The answer that I was looking for, however, is the reason why we as expert traders want to not feel like the top dog, even if we won a series of trades in a row, is because you don't want to feel. And some people may not understand this. You don't want to feel, meaning you don't want to be emotional. When I say you shouldn't feel emotional in trading, some people think they shouldn't feel negative, or they shouldn't feel upset or sad, or so on and so forth, or angry or frustrated. That's what people associate feeling emotional in trading as. But feeling emotional in trading is also you feeling the other end of the spectrum. And the reason why I want to highlight this for you is because the more happy you feel when you win a trade or win a series of trades, it's going to also be to the same degree how emotional you feel when you lose a trade or lose a series of trades. So if you're feeling ecstatic because you just won a trade, I promise you, you're going to be feeling very emotional when you lose a series of trades. It operates the same way. Let me give you another example. In the UK, okay, we call when someone does something that we don't like when we're driving, we call it road rage. Okay, road rage is where you say, "What's wrong with you? Why are you doing that for?" Okay, and you might start using some foul language, right? That's called road rage. Now, if you're somebody that reacts that way to road rage, you're going to be somebody that's also very emotional when it comes to trading. Because how you do anything is how you do everything. And the moment that you are very emotional to a certain degree, is going to be how emotional you react on both sides of the spectrum, both negatively and positively. Okay? So, when overtrading, this is what will happen. You might win 3 trades in a row, and you're feeling on top of the world, and because you're feeling like a top dog, you're going to enter a 3rd trade. Now, let's just say if that 3rd trade loses, you're going to be feeling some type of way because you're now in your feelings, right? So what you're going to do is you're going to take another trade because you want to get that feeling back that you was feeling having won 3 trades in a row and seen a certain amount of account growth. So you're going to take another trade, the 4th trade, to try and get that feeling back, that same feeling of ecstasy that you had encountered. Now, typically, that trade is like a revenge trade. And more time than not, because your sole focus is to get back that feeling of ecstasy, you're not necessarily going to be doing the best technical analysis. You're not going to be looking for trades with the best setup, the A+ setup that matches your strategy down to a T. You're going to be looking just to get the feeling back. That's all you're looking for. So you place a buy and a sell no matter what the market's looking like, you know, and your brain's going to be telling you all of these different reasons why you should be entering the trade, but none of them is based off of facts, off of logic, off of technical analysis. Okay. And here's a prime example of it. Thank you for sharing this, right? Someone posted in the chat box. Yesterday, I grew $18 to $240 and you couldn't get out of the market and you lost it all again. And that is an example of overtrading. Scalping is very easy to overtrade. But this is when it comes to you understanding you as a person. If you know that you can get into a feeling of overtrading, you know what you should do. And these are some solutions that we're going to speak about for overtrading, right? But for you to chase the feeling, to get back to that, you know, feeling that you had before, you're going to be spotting trades that aren't even there, right? And more than likely, that next trade that you go in on is probably going to be a loss. And guess what? You're going to be feeling more emotional. So guess what? You're now going to trade again. You're now revenge trading. You're now chasing this feeling that you had before. And now because you're so emotional feeling happy, you're now feeling so emotional feeling bad. And that next trade is probably going to wipe out your whole profits that you've made. Probably even wipe out your whole account because you're so focused on chasing that feeling, right? So here's some solutions. Number one is place one trade at a time. Okay, I've realized that some people, they get stuck in the market and they place loads of different trades, different currencies, so on and so forth. You know, they might double up on a position, even though one position is already running. If you know you struggle from overtrading, place one trade at a time. And it's not a flaw in your character. It's not a defect in your character to understand your character. And I want you to understand this. There is nothing wrong with understanding who you are as a person. Personally, I only place one trade at a time. Why? Because I know I could get emotional. But if you don't understand yourself, you're not going to be able to prevent yourself. So the moment that you can admit your flaws is the moment that you'll start to become profitable. You see, if you can't look in the mirror and say to yourself, listen, I messed up today because I overtraded, I got emotional, I then revenge traded, I was chasing this feeling of emotion, I was too excited, I was too emotional. If you can't look yourself in the mirror and say all of these things that you might deem to be flaws, you will never be profitable. Because I say, and you can quote me on this, the only way to change is first to become aware. Okay, the only way to change is first to become aware. And if you're not aware of who you are or how you're trading, how are you going to change? Right? So the first tip when overtrading is take one trade at a day, one trade at a time. Yeah, how many trades do you advise one to take a day on a good setup? It's down to you. I couldn't tell you without having a conversation with you and analyzing who you are as a person. Okay? And again, this is what we kind of do if you want one-on-one mentoring with me. Okay, I want to understand you. I don't want to give you a strategy or use some technical analysis or use some logic, and I don't know you as a person. Because see, this is the problem with people in trading, is they'll tell everybody to all do the same thing, but they don't realize that everybody's different in terms of their emotions and who they are as a person. You want to find a strategy around you. You don't want to build yourself around a strategy. So the moment that these people try to sell you these courses and so on and so forth just to get their strategy, and they're not giving you no psychology or no understanding of yourself, you just got the wrong course. Master oneself and you will master one's life. Okay? So the first thing you can do is take one trade at a time. Second thing to do is have a maximum win target for the day in terms of dollars. So you know when you're coming out of the market, and this needs to be predetermined. So let's just say at the beginning of the day, you decide you're going to be scalping. You need to say to yourself, $100, I need to come out of the market. I have to. Doesn't matter how many great setups you take, you know, or you see, you have to get out at $100. That's the maximum win target in terms of dollars. I'm sorry, that's the maximum win amount for the day. The next thing is to have a maximum win target, which is the amount of trades you can take in a row. If you win 3 trades in a row, stop trading. If you know you start to get in your feelings after 3 trades. I know for a fact after 3 trades, I'd start feeling invincible. And remember, the feeling of being invincible is still a feeling. It's still an emotion. Okay? Anyhow, moving forward. The fourth thing that you could do is report back to someone that's holding you accountable after you win each trade. And this is where it comes into the whole aspect of working with people, trading with a community, having a mentor, having a trading buddy, because now you've got someone to hold you accountable and they can help you with your overtrading solutions. The problem that most of us face in trading is that we can do it by ourselves. And because we can do it by ourselves, we try to do it by ourselves, but it's usually the long way to go. Because you're going to have to tackle all of these obstacles by yourself. Whereas if you just had someone there that you can report to, I promise you, your trading game would probably change in the best possible way. Okay. Now, these are some solutions for impatience. Write these down if you struggle with impatience. Number 1, modify your trading strategy. Okay, if you know that you need to be taking action, you need to be in some form of action, action taking place, modify your trading strategy so that you can get more setups. Okay? Change your trading style. This is another solution. Change your trading style to scalping, perhaps if you're impatient. And find a scalping strategy. The third thing I'd recommend that you do is meditation. The reason why I recommend meditating is because it allows you to almost remove yourself from the physical situation. It allows you to practice peace, internal peace. It reduces anxiety. And all of these emotions that are triggered by feeling at ease, or uneasy, should I say, because of a certain action that is yet to be taken. Okay? So meditation. And the fourth thing I'd recommend is to look at your cash flow outside of trading. If you're impatient when trading, one big reason could be because you're not making money outside of trading. For example, I just bought a new prop firm challenge. Okay, $100,000 challenge account. Okay. I just bought a $100,000 challenge account. Okay, it cost me like £500. I bought it on Sunday. I haven't placed one trade this week. And I'm okay with that. But most people, the average Joe, wouldn't be okay with that. They would have to be taking action. They would be feeling impatient. They would have to be placing a trade because they need to make some money from trading ASAP. They wouldn't be feeling okay with that. The reason why they wouldn't be feeling okay is because they've got no cash flow outside of trading. Because I know I've got cash flow outside of trading, I'm okay with not placing a trade, even though I've just bought the challenge. I'm okay with it. Okay. Someone said, what prop firm do you recommend? I'm not recommending or referring prop firms to people at the moment. If you're in the private community, then you probably know who my prop firm is that I use. But I'm not making any recommendations at the moment because I don't want to be liable if any prop firm goes under and you're not personally working with me. Okay. The next psychological issue when trading is loss aversion. What does loss aversion mean? Loss aversion means you're trying your best not to lose. And what does it mean by trying your best not to lose? It means taking your stop loss off, moving your stop loss further. Okay. How many of you guys can agree? This is a question, right? How many of you guys can agree? Whenever you move your stop loss further away to give the trade more room to breathe, can we agree your stop loss still ends up getting hit anyways? Right? Or is it just me? Every time I try to move my stop loss further, right, it still ends up getting hit, which is so painful because now you've now taken a bigger risk, which is uncalculated. It's not in alignment with your trading plan because you've moved your stop loss. This is what loss aversion means. And the reason why people do loss aversion, would you say it's fear or would you say it's greed? What do you guys think? Well, like some people are saying both just to say both, just to try and not get caught out, right? I would say it's fear. Fear of feeling like a failure. Fear of taking a loss. I wouldn't say it's greed necessarily. Okay. Now, what can you do to solve this psychological problem? Number one is you need to calculate your risk. Okay, this is the first thing you need to do is calculate your risk. How do you calculate your risk? This is the formula that you need to use so you can write this down. Whatever your total account size is, times it by 1%, okay, or however amount of percentage that you want to risk per trade. I would recommend 1%. And then divide it by the amount of pips that your stop loss is. And let's just say if your account size is 100,000, then 1% is 1,000. Or if your account size is $1,000, 1% is $10. If your account size is $100, 1% is $1. Okay, so now you've got your 1%. Divide that by the amount of pips for your stop loss. So if you can see a trade and you've calculated the stop loss is going to be 20 pips, you do whatever your 1% is, divided by the amount of pips, 20 pips stop loss. Okay, so let's just say if my 1% is $100 and my stop loss is 20 pips. Okay, I do $100 divided by 20, which would give me 5, which means I can risk for £5 per pip. Okay, or this example is if I can risk $10, $10 is my 1% of my account, divided by 20 pips, it means that I can risk 50p per pip, 50 cents per pip, which is also known as 0.05 lots. Okay, so calculate your risk, number one. Step two is accept your risk. If you're not okay with your risk, don't go in with the trade. Simple as that, or risk less. Third thing that you can do is detach yourself from the outcome of this trade and focus on the next 10 trades. People are too caught up on trying to get rich off of one trade. And if you think you're going to get rich off of one trade, you're probably going to go broke off of one trade as well, because you're so emotionally tied down to that one trade. Remember, if you lose this trade, you're still going to have to trade again. If you win this trade, you're still going to have to place another trade again at some point, which means you can lose all of the money that you've made, or you can make all of the money back. Okay, sorry guys, for those of you guys that's on my TikTok, you know, I haven't connected my phone to the Wi-Fi here. That's why you need to get onto this session, right? So yeah, focus on the next 10 trades instead of the next one. And the final thing to counteract this psychological problem is to have a casino mentality. When you're playing roulette on a roulette table, there is 50, I think it's 50 black, 50 red. And then there's one which is green. This one which is green is what gives the casino its profitability. Okay, because that means that out of 101 spins, the casino should win 51 times. The player should win 50. And it's just because of that one extra why the casino is a profitable business day after day, week after week, month after month, and year after year. Just because of that one square or that one number on the roulette table. So it's the same thing that you need to think of when you're trading. Forget about, you know, you could lose 50 trades. It's your edge, okay, which is going to make you money. Not this one trade. It's how you're positioning yourself over a series of trades, okay? And lack of discipline. If you lack discipline, write this down. You need to practice discipline. If you're not disciplined to stick into your trading plan, then you're probably not disciplined in other areas of your life. Sorry to say it to you guys, but that's the reality. I know what my discipline's like. Okay? How disciplined are you in different areas when you say you're going to commit to something? As an example, I've been posting 3 times a day on TikTok, which is where most of you guys know me from. I've been posting 3 times a day on TikTok for the past 7 months and 1 week. Could you do that? Okay. How else could you practice discipline? I'm going to give you something that you could practice. I challenge you to, before you go to sleep or when you wake up in the morning, to get outside and run around the block or walk around the block. It doesn't matter. Okay. And I want you to do that every single day for 3 months straight. If you can do that and you complete that task by the end of the 3 months, You've shown and proven to yourself that you can be disciplined. And it will pay off in your trading. Why? Because you've now said, now your brain believes you when you say that you're disciplined. Now your brain believes that you can stick to a plan despite how you feel. There's going to be some days where you don't feel like going for a jog. There's going to be some days you won't feel like going for a walk around the block as soon as you wake up in the morning. There's going to be some days where you're going to have to go, you know, and maybe you're on holiday within that next 3 months. Maybe your family, or, you know, there's an emergency or whatever within the space of that 3 months. Where most people, they would avoid the discipline and see to that emergency or see to that holiday or see to how they're feeling and not stick to their discipline. But you, the person that wants to commit to you being disciplined in trading, will stick to your discipline so that you can now say to yourself after 90 days, I'm a disciplined person. And I now believe that I can follow my trading plan. That's what you need, is the belief from showing that you're disciplined. So how you do anything is how you do everything, okay? And the final thing that I want to touch on is that loneliness in trading is very lonely. And I actually had someone message me the other day saying, you know, can you be my trading buddy because trading is lonely? You know, I feel lonely in this space. And it can definitely feel like that. This is one thing that isn't motivated by greed or is motivated by fear. Okay, loneliness, it's a real thing. And you can get depressed in trading if you have no one to hold you accountable, no one to speak to, no one to share how you're feeling. And so how do you combat loneliness in trading? Is to join a forum, join a channel, join a group chat. The best way is through two-way communication. Find a trading buddy, find a trading mentor, attend trading events, attend trading seminars, attend networking events, attend different calls, different workshops, kind of like the call that you're on today. Okay? This is going to help you combat loneliness in trading. Sometimes you just need somebody to vent to, somebody to speak with, somebody to just have a conversation with. And I promise you, it's the best feeling ever when you find someone else that's just like you, just on your same journey. And I'm sure some of you guys can agree. Okay, someone said, this is a problem for me until I found your TikTok page. Exactly. Okay, and I appreciate you. So loneliness in trading can be a big thing. Now, to recap, okay, in fact, has this been helpful for you guys so far? We've gone over what you need to be to trade. You need a smartphone, you need MetaTrader 4, you need a broker or a demo account, you need TradingView, you need your knowledge, which is broken down into strategy and psychology, and you also need the sixth thing. But I want to find out if this has been helpful for you guys today. Let me know if this call has been helpful for you. Thank you. Appreciate the feedback. Now, the sixth and final thing that, you know, I believe that you need as a trader is a community. Okay, there is a woman, her name is Dianne Feinstein. Okay, Dianne Feinstein was a lady, she's now passed away. I believe she reached her 80s or 90s, but she was an old lady. And Dianne Feinstein was actually a politician. Okay, so as a politician, you're not a millionaire, but you're making good money. You know, you're middle class. And she was making good middle class income as a politician, old lady. Now, when Dianne Feinstein passed away, she left behind over $70 million in cash for her children. She left behind a $27 million mansion, a $5 million mansion, a $2 million home in Hawaii on the beach. She left behind a private jet. She also left behind various different assets, which had, brought up her net worth to over $100 million after she passed away. Now, how was a middle-class woman, as a politician, an old lady, able to accumulate so much wealth when she passed away to leave behind to her children? The reason why is because she was a trader. She was an investor. Okay, just like us. Now, she didn't know too much about trading. She didn't know too much about investing. But there's there's one secret that she knew that made her able to leave behind everything that I have just mentioned that she left behind for her children. And that one secret was the community of people.